Good morning, Wall Street winners. It is Friday, March 21st, the first day of spring, and my lovely wife's birthday. Happy birthday, lovely wife of mine. And the markets today are off to a weak start. So if we take a look at the futures here in the Bloomberg app, we're in the red across the board. And it's interesting, honestly. I mean, nothing seems to be predictable these days. If we take a look at the Yahoo Finance app, we had earnings out yesterday from three big companies. So starting off, we had a look at Lennar. So Lennar is a big U.S. home builder. They beat estimates, but they came in lower than the previous year's quarter. And so with that, they're down 4.2% in the pre-market. We had FedEx come out, and obviously with consumer sentiment down, the number of e-commerce packages being delivered is probably dropping, and that's led to a drop in package delivery. So FedEx got hit and missed on their numbers, and they're down 9.4%. Then we turn over to, we'll call it the semiconductor space, although Micron isn't necessarily in the semiconductor space, but they're in the supporting space. So a lot of different types of memory chips and or DIMMs and other products that they make that go into these computers that have the semiconductors for AI. And if we take a look at Micron actually beat yesterday. They beat on revenue, they beat on earnings, and pretty significantly. And they had a great future forecast that was better than what their estimates were. And this stock was up in the post-market yesterday, and it is now down 3% in the pre-market. So I would have thought Micron would have been $110, $115 stock today, but there's just so much negative sentiment out there that negative sentiment, I think, is preventing even companies with good results from accelerating at earnings and jumping. So last quarter, when Micron came out and beat on estimates, beat on revenue, earnings, and future forecast again, they jumped to 110, 115, somewhere in that range. And they popped. But that was when the narrative in the market was very different. So that's the market that we're in right now. And you can see across the screen here, crude is down, just down, but at $68 a barrel crude futures. You've got the VIX, which is up only slightly, which is odd because with all of this negative sentiment, I would think the VIX would be closer to 25 to 30 at this point. Scrolling down, it's not looking like, yesterday was a pretty bad day for retail, and it doesn't look like it's getting much better from a retail perspective. Most of the retail in the red there at the in the pre-market. And then Nike had results yesterday as well. They disappointed, so they're down another 7.2% right now. I think long term, I think it's $67. Nike is a steal, but there's a lot of things that need to change before any of these companies start to catch an upward trajectory and move in that upward direction, and we start to see more green on the screen. The whole narrative has to change, and I don't think any of that is going to change until we get past April 2nd. And I am optimistic when we get to April 2nd. There may be another semi-correction or another drop in the overall markets as tariffs are implemented. But once they're implemented, and as long as they don't continue to add more tariffs, then we'll be in a more stable state where people maybe aren't happy with the tariffs in all cases, but at least they'll know what the playing field is like, and we'll have a new level playing field to work with. So although I can't see retaliatory tariffs from other countries not being implemented afterwards. So I think April is going to be, early April is going to be an extremely volatile month. And I can't see us not going into a further correction in that, in the month of April. As we get to the mid part of April, we'll start to get earnings, first from financials and then obviously from others. And if we can see some positivity from earnings, then things might start to change towards mid to end of April and into May, but that all remains to be seen. Anyway, where's a safe space to go right now? It seems as though a safe space is in the utilities area. So Con Ed doing very well these days. Vistra also doing fairly well these days. And then oil. I mean, oil has been a sector that has not been doing very well, but it has started to turn around. And even with crude, surprisingly, down in the below 70 range, so at 68.02 right now, crude has still had some upward momentum. And it's a sector that we haven't heard a lot about other than we want to keep energy prices low. So knowing that the US government wants to try to keep crude prices low, we're going to have to see whether oil companies can make money in this environment, and maybe deregulation will help. I don't know. I really don't know. I mean, I don't know how many immigrant workers are used in the oil and gas sector for various jobs and what the impact of mass deportations has been to that sector. That's all of this is really still playing out, and with numerous lawsuits against the new administration for some of the things they're doing. Just yesterday, I believe it was the Supreme Court in the U.S. said that the Doge group is no longer able to have access to social security information in the U.S. So obviously a change there. There was a decision as well about not being able to deport folks to Venezuela who were in the U.S. illegally without some kind of actual U.S. process being followed to ensure that these folks really are criminals before sending them all back. So there is just a ton of issues that are new issues based on new actions that have been taken that we're still trying to work through and grapple with. And that, again, is leading to a great deal of uncertainty. So you can see I still am in a bit of shock that Micron is down $4 going into the open today. A stock that popped up to 108 in the post market after earnings release. It's frustrating when you're doing everything right and you still get penalized for it. Anyway, it's very very red on the screen today in technology. And, if you're positive on technology, maybe today is a day to look at a call, buying a call option for one of the indexes like the QQQ. Now, on the flip side, and I'm not happy the market's going down, but I did buy, as I alluded to in earlier videos this week, I did implement a strategy of buying puts on the QQQ, and I bought a put at 480 and I bought another put at 479 with March 28th expiry. And if the QQQ is down $4.22 at open, so if it stays in that range for another 45 minutes, those will definitely be in the money, and I'll be watching the QQQ at open and looking to potentially close out those positions depending on the direction it's moving. So there is an opportunity in the market to make money on the downside. You just have to look at the different vehicles that are available to you to do that. And one of those is a put option. And then when everything drops today, if you feel like it could go up next week, you could buy a call option. And if the market goes up, the call option should go into the money. So that's one strategy. Hey, and if you're liking these videos, please hit the like and subscribe button. As we scroll down further through tech, it's just a lot of red on the screen. AVGO is down. Meta is down. Now, I bought a call on Meta a couple of days ago at 575, good through till March 28th as well. And that ticked up to 605 yesterday, Meta. You can see that in the 5-day. Actually, it says 611 up there. Anyway, 608. That spiked $22 or so early in the morning session yesterday, and that option went up $12 to $15 in that range. And I got out of that, making a very tidy little profit on Meta on the call. Now, had I held it, it really would have ended the day a little lower than where it started. So you've got to pay attention to those options and act on them when the momentum is moving in your direction. We scroll down further, and NVIDIA was recovering yesterday a little bit, and now it's off about the same amount as it recovered. Same with Google. Everything is just getting slammed. TSM had a pretty positive day, but it looks like it's going to lose most of those gains from yesterday this morning. And then we have financials. And financials overall didn't do too bad yesterday. The big ones fared better than some of the regionals, but you're seeing most of those giving back those losses this morning. So when I look at Morgan Stanley and see that it is likely to enter the 119 range today, I think that by the time we get through to April, call it April 10th, 8 days after April 2nd when the tariffs come in, I believe that this stock could be a $99, $98 stock. And if that's the case going into earnings, I think there's a lot of potential for it to move forward. The same is true with Goldman. I wouldn't be buying Goldman calls right now. I'd probably be buying some puts on these or the greater market, which would be less risky. But once we get past April 2nd, and I'm assuming we're going to get hit again in the market on or after April 2nd, I would be looking at picking up some calls for close to in-the-money calls for Goldman and Morgan Stanley, as well as JP Morgan going into earnings, because I do believe these three companies, and you can use JP Morgan as a bit of a bellwether because it'll come out and make announcements first. It's announcing on April 11th, whereas Morgan Stanley and Goldman will announce a little bit later. Actually, no, Morgan is on the 11th as well, so it's Goldman that will probably announce a day later, 2 days later, 3 days later, the 14th. So you can use JP Morgan and Morgan Stanley as a bit of a bellwether and put your toe in the water and test those call option theories, and then go in more depending on the direction with Goldman and some of the other banks as well, if you believe that there's potential for those to be doing well. Anyway, that is where we are today on the 21st, and good luck in your trades. I hope you're managing your risk and mitigating your loss of capital as we go through a bit of a correction phase in the market. In the long term, all of this will be meaningless because the markets have always corrected and gone to the upside over the long term. So this is a short term, very micro focus versus a macro view. But it is painful to watch, especially if this money is money that you're living off of on a month-to-month or yearly basis, and you need to dip into those savings and draw down on those, and the amount that's in the account continues to decline. So stay positive. Everything will turn around, and the world will resume to work as we once knew it, but it just may work in different ways. So we'll talk to you again shortly. Good luck.